Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong, and today we are talking technical analysis. And I thought we'd talk about some different price patterns and how one might trade those. And we're going to look at past trade patterns and how those have played out, and then we'll look at some current trade patterns and look at what one might choose to do with those. If you are not following, I've got James Boyd with me in the chat. James and I have a long history together. We are both fellow coaches, and we like to tease each other a bit too. So it's always great to have James on board in the chat. But if you are not following us on X, my friends, you are missing out. James Boyd CS, Barb Armstrong CS. You can now wander over to LinkedIn and find me on LinkedIn as well. I see a lot of the usual suspects are here in the chat, and I want to thank you guys for following all of these webcasts and for contributing and helping bring such positive energy to everything that we do. So to David and AP 514 and Josh and Will and Zach and Dom and Marcus and the rest of the gang, appreciate you being here. And also love it when you guys attend these live events, because when you go to the live events, I've met Will there and Josh and a number of others, and then it just creates a whole different level of connection. So, and a lot of people, like I know when I attended these events as a client, I ended up establishing friendships that started in 2011 and 12 that I have to this day. So if you've never been to an in-person event, I'll show you how to access those. I'll be at the one in Chicago. So will Kevin Horner and Ben Watson. That's coming up mid-July. And then I think from there, we're going to Dallas first weekend in August. So be there, be square. And make sure if you're there and you see us, you come up and we get a chance to meet. I would love that. So for this class, know that everything that we do here is for general information purposes only. We're going to look at a bunch of charts. We're going to place some example trades, but know that this is all for educational purposes only, none of it to be considered to be a recommendation. We also don't, recommend that technical analysis be your sole means of investment research, because you're going to want to look at what's going on with earnings, what's going on geopolitically within our country, within the world. You ignore the Strait of Hormuz at your peril. We will do our example trades on the Paper Money software application on the Thinkorswim desktop platform. Say that 3 times fast. And it is a brilliant place to learn. I created a 9-week rotation. Last week we talked about candlesticks, and this week we're going to talk about price patterns, but we're going to look at a little bit of a lot of different things here. So we aren't going to focus on one price pattern per se, but what we will focus on is in looking at how we can identify price patterns and then use those to inform decisions on when to enter a trade, how to place a target, and how to place an exit. So that's what's on the menu for today. So let's start with Apple. And I think James talked about this one in his class as well this morning. But, one of the things I wanted to point out, because, I've been posting a bunch of stuff on X today. So I don't remember which one this was. We could go over to X and find out pretty quick, I guess. I should do that. That may be Johnson & Johnson. In any event, we're starting with Apple. So, when we look at Apple, we had this pretty strong uptrend. The red line is our 30-day moving average. And for a while, this was, the 30-day moving average was acting as a support level. And then we went through this period of consolidation, and we call this a double bottom pattern. I always think of this song by Queen, something bottom girls, but we see this double bottom pattern. And the way a trader might look at this is to say, well, we've gone from, and these are not finite numbers, support and resistance are ranges. We say we've gone from about 247 to 278. So if I take 278 minus 247, that's a range here of about $31-ish. And so if I wanted to put a target on this, I could add 31 to this 278 number. And my target would have been 309. And did it get up to 309? It actually, came up to 317. So, sometimes these patterns do work out. And then sometimes it turns out it looks like it's breaking out and then it comes in and it may come all the way back down here. So if we look at something like American Express, and the way I describe American Express is that it's flirting with breaking out. And what do I mean by that? And this is a similar pattern. It's not quite the same. This one, instead of a double bottom, we've got the first bottom, and then the second one is quite a bit shallower. So this is kind of more of a, some might say more of a cup and handle pattern. Now we'd measure the distance the same way, 292-ish to 337-ish. I'm putting ishes on those, 337 minus 292. So one might put a target $45 above. And this is a current pattern. So if we said, okay, if I take 45 and add that to 337, that would give me a target of 382. And that's not far off this previous high on American Express of 387, right? Sorry, I didn't mean to just draw my line through there. Let me erase that. So we're within the neighborhood of this previous high. But when I say it's flirting, when we look at it, sometimes what some traders will want to do is they'll say, I want to see if this breaks out, if this continues, because it could not, it could turn out it's not a breakout, it could be a fake out. If it comes back and bounces, then I have a higher degree of confidence that in fact this old resistance level is now acting as new support. So far this breakout, today is the first day it's breaking out, depending on how you draw your line. Okay. Okay. So with this one, you might say, well, I'm going to look for a setup or a pattern that has a little more confirmation. Others might say, I'm going to be proactive and I'm going to place a trade today. And it could be a stock position, it could be, an option position. And, if you were doing this with stock and wanted to, put a target on it, you could do that. And then where would you put an exit? Well, you might say, well, if I'm assuming this 337 level is going to hold, if that's my expectation, then I would put a stop maybe 3% below that. So I'd say I'm going to take that 337, multiply it by 0.97, and I'm going to put my stop at 326. So if it comes back down into this range, that's not where I'm expecting it to go. I would want out. And so if you're saying, I'm seeing this as a breakout above, and I'd like to do this as a stock position. So I'm going to take 382 as my target and 326.89 as my stop. Now, when we put in a stop loss order, or a target for that matter, there isn't a guarantee that we're going to get out at exactly the price we requested. Sometimes stocks will gap and it can work either in our favor or against us. And so if you wanted to put your target on the chart, you could just come up here, say, I'm going to make this target 382, and I've just drawn a line somewhere in the neighborhood, and then I can always tidy it up. So we can call that a stock target. And what level of confidence do we have? Well, technically, the financial sector has been showing strength. So if we come here to our sector indices and we look at financials, it looks kind of similar, doesn't it? Like we've had this this cup and handle pattern on this whole sector. Do you see that cup and handle? So we're seeing a lot of stocks in the financial sector that are showing similar patterns. And then we've had a breakout. So we had a breakout here. So a pretty defined cup and handle pattern. And so this is kind of congruent with what's been happening within this industry group. And then, of course, if we look at the SPX overall, we're not at an all-time high, but we're within a stone's throw of it. So the market's been strong. The financial sector has been strong. The tech sector's been strong too. In fact, it's been the leading sector over the last 3 months. But, again, we had kind of this big bull flag pattern happen here, which is foreshadowing, my friends, because the next trade we're going to do is kind of a bull flag-ish pattern. But let's go back to our American Express and come to our trade tab. This is one thing, like I haven't seen a survey and we may not have one yet. We may not end up having a survey today, but let me go into the larger account. When there is a survey, we do read those comments. And one of the comments that I saw was, I really appreciate example trades and wish we would do, more of them in this class. And I would usually do at least one, but I'm trying to up that a little bit. And so, if we said, okay, this is the $34,000 position, if we're okay with that, we do 100 shares. If you said, well, I don't want any one position to be more than 25,000, then we'd change that to accommodate it. Oh, it's saying, why is it saying no? Let's just see if it'll let me. It's saying available funds for trading. I don't know why it's not giving me a number there, but let's go ahead and I'll show you how this would be put in. So we're going to put in our target at 382. There may be something wonky with a position. And then our stop, we're going to put at 326.89. And so, it's saying here's our investment is 34,000. We have a stop almost $14 below where we're intending to buy and a target $41 above. And so we would put that into our stock with target category. And you might make a note here that your target is based on the cup and handle pattern. And this is just a note from you to yourself. Okay, so we've got that one teed up. Now, the next one I wanted to look at, today is partially sponsored by the letter A. If we go back to Apple, so, we had this uptrend, we had this period of consolidation, and then when we looked at it, this pattern did play out. Had we placed a trade, say on this day when it first broke out, or on this next day after we had a 1-day pullback. So this is what I say, we're kind of flirting, and then it really moved. But when we look at this, once it started to move, man, it kept moving. We had a 1-day pullback, 1-day pullback, 1 day, 1 day, 1 day. And then we had, if we're looking at this from a longer term perspective, some might look at this and see what kind of pattern. Looks a bit like a bull flag pattern, doesn't it? And then we would have had what you would call a hold, close above the high of the low day. which when you have a bull flag, some might consider to be an entry on this day here. And then it pulled back and now it's moving again to the upside. And so how might you establish a target when you have a flag pattern? Eric, you've got it. So there are two common ways. And in fact, there are three ways, that leap immediately to mind. One, you could do a 1 ATR target. I don't even have ATR on the chart today, but I'll show you how you could add that. And it shows up at the bottom of our chart, and I'll bring that up in a minute. And if it says, hey, if in an average day Apple moves $7, then let's buy the shares, and if it goes up $7, then we're out. So we could do that as a target. So that's number one. Number two, we could do a swing target. We could say, and like you may just want to long-term buy and hold Apple, and you can do that. Or you may already have Apple in your portfolio as a longer term position. But if you had a part of your portfolio that maybe you wanted to generate some income, and so you were doing shorter term trades where you wanted to go in, make some money, and ring the bell. And I have affectionately called that my Paris for Christmas. James might call that his Rome for next summer, or whatever floats your boat. It may be your new car fund or whatever. Somebody said maybe it's the money for gas to put in the current car fund. But we could have a swing target, which is basically the previous high. So we could put in a swing target. Now, the third thing we could do is measure the length of the flag, and we could have a flag target. So we could have a flag target. And how would we do that? Well, we have drawing tools. And so we can take our drawing tool, not these tools that I'm using. Yeah, so somebody's saying, is it fair to say that a pullback in an uptrending market is a bullish side? Well, what I would say is that a pullback like this in an uptrending stock or an uptrending market, when we look at, say, what's happened with the SPX, I mean, this went up, and here's a quick way to measure. So this went up, the S&P 500 went up and hit a new all-time high. It went up 20% in 46 trading days. Like, that's extraordinary. So are we then going to be like all shocked when it pulls back for a few days? And how much did it pull back by? Well, it pulled back by like under 5%. We would say that's a pretty normal occurrence in an uptrend, that a pullback is part of a healthy uptrend. Okay, so good question. I'd say the answer is yes. So here, when we look at Apple, now, if I were to bring in this 1 ATR, edit studies, you can just type in ATR. Now, of course, it's at the top of the alphabet, so you can just see it and add it. And when we add it, if I hover over today's candle, we can see that in an average day, Apple moves about $7.12. So we could put in a target of 305 if we wanted to do a short-term target. So we could put in a target. And these are approximations. So this could be an ATR target. Show that on the right. And if you want to do a swing target, you could say, well, I'm going to come up here around this 317, this previous high, and this could be my swing target. We could make that 317. Oh, sorry, swing target. Now, if we wanted to do a flag target, how would we do that? Well, we'd measure the length of the flag, and you might say, well, if we measure from here, where it broke out, up to here, so we could draw this line and then duplicate it and bring it over here. And so that target this might be a flag target. And so which one is right? Well, there is no one right answer. One, are you doing this with stock? Are you doing it with, are you doing this with an option? How much time do you want to expiration if you're doing this with an option? Somebody else typed in that you could do this with a Fibonacci target. So that's a fourth way, is you could use Fibonacci's also. I don't want to clutter my chart up too much, but I like where you're going with that, Robert. So, and I dedicate a whole class to talking about Fibonacci's. So, for our example here, we're going to pick a swing target and we're going to keep it simple and we're going to buy the stock. And so, you might say, well, the stock's already trading at 298. If we get out at 317, like that's not such a big whoop. Well, excuse me, like that's still real money. If you take 317, you subtract 298-ish, well, 298.62, let's call it $18. If you did 100 shares, that's still $1,800. And if I divide that by 298, it's still in the neighborhood of, like, it's over a 5% return, close to 6%. So this isn't a long-term trade. It took us how many trading days? 1, 2, 3, 4, 5, 6. Like, what if it takes us 15 days to get back up there? Now, it may never get back up there. Yeah. But, I like to say beats a poke in the eye with a sharp stick. And I have some friends I don't use that expression with anymore, because a friend of mine, one of her friends, did get poked in the eye with a sharp stick. Hiking just up the road from me. And I was a first responder for a long time, and she was pretty traumatized by it. And I said, like, even as a first responder, I would have been pretty traumatized by an injury like that. Anyway, I digress. So we are going to go in, we're going to buy custom. Now, where might we put a stop? Now, for this one, you might say, well, here was a recent low around that 287 mark. And some people might say, well, as a standard, I use 3% below a recent low. You might say, well, I might use 2%. You can use whatever you want. But if we said, okay, if we see the recent low at 287.38 and we go 2% below that, that would be 281.60. So if it went down to 281, it's not going in the direction we wanted. This is our short-term, a short-term approach, a shorter-term approach. But we want to give it enough wiggle room that the goal is not to be stopped out, but we also don't want to, if there's a change in the trend, we don't want to be caught holding an asset where we're losing money. So we're going to buy custom with OCO bracket. We're going to put our stop at 281.63. And our target at 317. And this is one of the things I like about Thinkorswim, and there are many things I like about Thinkorswim, but one is that it does the math for me. So I'm risking 17 for the opportunity to make 18. So it's a little better than a 1-to-1. I'm not, Stock Market Playbook has a question. I'm not sure I understand that. Can you show buying at SMA a simple moving average of 150? I tried it, but it didn't work for me. Okay. So we're going to put that in our stocks with targets. Whoops. And again, this is swing target. And especially when I was new, I found that when I typed this stuff in, it just helped because sometimes I was going like, how did I get that target again? You know, it's a bit like drinking out of a fire hose in the beginning. And so, you know, if you're in that kind of situation, just know that you're not alone. So was it JP Morgan? Let me just see. Oh, it was JP Morgan. So JP Morgan is another one. So again, we're looking in the financial space where when we went and we looked at that sector, we saw this kind of big cup and handle pattern. And you know, I did just this was the last chart I posted on X, where you know, do you see what I see? You know, if we're playing I Spy, I see this inverted head and shoulders pattern. There's the shoulder, one shoulder, two shoulder. Here's our smiling face. And then it's moving to the upside. And you might say, well, could we do a swing target? Well, we could, but we're already at 330 and the previous high is 337. So this might be one where you'd want to measure the width of the pattern. And if you say, well, it's gone from around 283-ish to about 317, 283 minus 317, about 34 or $35 approximately. And so you could say, well, if I take this 317 and I add $34, where does that get me? About 350. And now it's at 330 and you're saying, well, $20, that's a $330 investment. But if I take, you know, a $20 move and a potential profit divided by 330, that's still a 6% return. Now, it might not get up there. You know, and so this is one where you may want to come and look at the live news. Now, we had the last earnings, but when I look at this, 524, 507, 463, 594, and it gapped up on earnings. So it seemed to have been a positive earnings response. We probably have earnings coming up end of July here. You know, and if you want to see when the earnings are coming up, you just kind of click on it. So mid-July, we've got earnings coming up. We can come over here and also look and see what the analysts are saying about this. And you know, earnings was a little bit ago, so you may have to scroll down. And you may find something and you may not, because there's a lot of press on this. And we had the last earnings was in April. And this only goes back to, you know, the beginning of June, because there are so many, you know, this stock is mentioned an awful lot. So you may have to do a little bit more digging to just see, but you can click on any one of these and just see what they're saying about this company, right? So if you wanted to place that, you know, you'd put in your target, put in your exit. Where might you put in an exit? Well, you might say, I'm going to go 3% below this low here. Let's look at Google. So here's another stock that's been really uptrending, right? Like it's up only 18% year to date, only 18%. You know, it's not doing too badly, but you know, it was using this 30-day moving average largely as a support level, had a bit of a pullback, and then, you know, there are many, if you were paying attention, if you were following this stock, may have said, well, I saw a diagonal resistance breakout here, and then it kept going. And then it gapped up on earnings Like, look at this last earnings was 282. This one was 511. $5.11 a share. So a pretty decent earnings report. It's come back down to where it gapped up from and is moving to the upside again. And so, if you wanted to find a target, could we do a 1 ATR? We could. Could we use fibs? We could. Could we just do a simple swing target and say, you know what if I just traded it back? If I'm looking to go on a vacation in the fall and maybe you have some shares of Google that are in your long-term buy and hold, or you've invested in an index or something that, tracks the S&P 500 or the NASDAQ. Google has a role to play in both of those. Like if you come to the Market Watch tab, we can see the Googs over here. And they aren't just a little bit of the S&P, they're a pretty big presence. And they don't go unnoticed. They're an even bigger presence on the NASDAQ. And so, if you invest in something that tracks these indexes, then you already have a little bit of Google in your life. But if you said, I see this also as a diagonal breakout, and others might say, well, I see it as a bounce off a support level, this being, where it started to gap up. It's a potential support level and it's moved up. And you might say, well, did I miss it? Like, wasn't this the entry? Didn't I have a close above the high of the low day here? Yeah. But if you were waiting for this diagonal resistance breakout, yesterday might have been an entry, and it's, up $3 a share, but that's less than 1% for Google. And if you say, well, if I could buy at 372 and exit at, say, 408, I bring up my little calculator. So if my target was 408, whoops, and I buy at 372 point, let's make it 0.5. We're live in the markets. So if I could make $35 a share, that's almost 10%, right? Like I divide that by 372. Yeah, that's 9.5%. I mean, that's not too shabby. So we're going to come to the trade tab. We said, okay, let's make that a go. Oh, now where do we put our stop? Well, we might say, if you want to give it some room to move, 3% below that 355 or 2% below that 355. So 355 times 0.98, 347.90. So if we went with 347.90 for our exit, 408. So if we wanted to put our target up here. Now, let's say it gets to 405 and then we get a hanging man or, a shooting star or, a candle pattern that indicates that this uptrend may be coming to a close, then we can always choose to take the money and run, right? We don't have to stay until it hits that exact target. When it gets close, we can choose to exit. So we're going to buy custom with an OCO bracket. 408 will be our target. Was it 418? No, 408. And this was 347.90. Oh. 347.90. We're going to make that good till canceled. So we're investing $37,000. We want to exit when it goes up $35 a share, or if it comes down by $24.50. So we're risking about $2,500. Again, if it gaps up, we could end up out higher than this. If it gaps down, we could end up out lower than this, because this is a stop market order. If it goes below 347.90, it will trigger an order to exit at the next available price, and that could be lower. But this is why a lot of people will only do trades like this on stocks that trade at least 1 million shares a day or more. Some might say, I want it to be 5 million a day. Like, we're at 15 million on Google, and we still have a couple of hours before the market closes, and this is a swing target. And if we come back and we look at Apple, 21, almost 22 million shares traded today. American Express, 1.2 million. All right. So that's American Express. We did that one. Apple, Google. We looked at JP Morgan. Let's look at Bank of America. So back to the financial space. Okay. Okay, I'm just looking at the chat. I just don't want to miss your questions. Oh, you're talking about putting in so somebody's talking about putting a conditional order if something goes above a simple moving average. I actually would have to do, some toying around to figure out how to do that. I don't tend to place trades based on that type of conditional entry. I tend to do that more based on the price of the stock. So for example, with Dexcom, so here's another cup and handle pattern. Some might say, well, I see an inverted head and shoulders, and both of them are valid, and moving again to the upside. So there's another example that we could look at. But if we look at conditional entries, so if we look here at Dexcom, we once again have, oh, now does this not want to work? Just give me a sec. Sorry, let me erase that. So we have this double bottom pattern, right? And then it broke out and it came back to retest, but now it's like, is this breakout a fake out? We aren't sure. And so in our trading a smaller account class on Friday, we put in a conditional order to say, get us in if it goes 20 cents above the high of Friday. And then we changed it and said, well, if it goes 20 cents above the high of Monday, get us in. And so just looking at that, we might say, well, we're going to leave that just as it is. But if you wanted to put in that type of order, you could come here and say, well, if this comes back up, and let's say we chose this candle here or this candle here, you could choose either one. But if you said, okay, this was the high of this day was 76.25. So I'd like to place a trade here and I'd like to put a target. So this went from 54 to 74. So I'd like to put in a target of 94 and an exit of, what's our recent low here? 73.30 times 0.97. Our exit would be 71.11. But I only want to enter if it goes above 76.25, and I'm going to add 20 cents to that. Or you might want to add 50 cents, whatever your rules are for a conditional order. So let's say we made it 76.45. It's currently trading at 73.58. And so if I just do 100 shares as an example, we're going to buy custom with an OCO bracket, just like we have on the other ones. The difference is that for this, we're going to make it a market order, and we're going to hit our disappearing, reappearing. Now, when you see James do this, he tends to do it as a buy stop. But we're saying, hey, we only want to buy this if it goes above 76.45. So if it goes above 76.45, we're in. And then we want to stay in until it gets to 94. Or if it doesn't go according to plan, if it comes back down to 71.10, we're out. And we're going to make both of these good till canceled. And so, we're looking at, a conditional entry, only this one, it's not based on the moving average. It's based on the pattern. And, to say, is this a breakout or a fake out? I'm not sure, but, if I get sidetracked, I'd hate to miss it. Maybe I'm going on a trip and I don't want to be spending a lot of time looking at these things. I'm going to put in a conditional order. Now, if it gets filled, we could throw our shoulder out for patting ourselves on the back for being wise enough to place the trade. If we don't get filled, do we beat ourselves up for placing a trade that turned out not to be a good trade? Yeah, no. We avoided placing a trade that would have turned out to be a losing trade. So we could throw our shoulder out for patting ourselves on the back for that also. So whether we get in or we don't, either way, it's a success. It's prevented us from placing a trade that wouldn't have worked out or got us into a trade. And, sometimes it'll get you in and then it comes back down and it doesn't work out. Like, there is nothing that's foolproof, but we're just trying to be disciplined. Yeah. Yeah, we do still have a script class. Yes, it used to be taught by Ken Rose. I really hope he's loving his retirement. Mike Fairborn is now teaching that class, and it is Thursday afternoons, I believe. Okay. So there's an example of something that may be setting up and it may become interesting, but we're just not sure yet. And we'll have a higher degree of confidence if we see it trade above here. So if we wanted to put that on our chart, for you visual people, of which I am one, that would be our conditional entry. And so this is how we can use patterns to determine entries and targets and exits and all that other good stuff. And if we wanted to put our potential target, we just draw another line. And we wanted that target to be 94. Now, that's not even on our chart. Like, so you're going to say, well, where did it go? So for here, we can come over here. And when we come to our price axis, we can say, just give us a little more room to the upside. Oh, we'd have to give ourselves a lot of room to the upside, I guess, to have that one show. And the other thing is, when you're kind of zoned in here, if we come out to a 1-year chart, now we can see where that, our price level is. Well, it's just showing, I guess I didn't price target. Put target in there. There we go. But we're not in it, right? Yeah, so scripts can be really handy. Like, this here is a script. And both James and I have a post pinned to the top of our X feed with scripts that we commonly use. Okay. Okay, so guys, our 45 minutes, it has come and it has gone. We've placed a conditional order on Dexcom, and then we placed orders with targets on Apple, Take-Two, TTWO, and American Express. We also looked at JP Morgan and Bank of America. So we looked at a lot of different charts today. I hope that you have found this interesting. My ask as we wrap things up is please hit the like button and subscribe to the channel. It's free to subscribe, and there's a lot of great content out there. Make sure you have a trading plan and trade your plan. Make sure you're following James and I in the Land of X, Barb Armstrong CS and James Boyd CS. You can find me now over on LinkedIn as well. So head on over there and find me on LinkedIn and follow and say hello. Thanks to James for his help in the chat, and to the guys behind the scenes for all they do to help bring these webcasts to life. Take care, everyone. Have an awesome day. Bye for now.